Hi Gretel, so in today's video we're going to do a statement of financial position, which is also known as a balance sheet. So remember, on the previous video we cover income statement. So if you haven't watched income statement that we covered, please make sure that after this video you go and cover income statement or statement of profit or loss. All right, so a statement of financial position is also known as a balance sheet. So under this balance sheet that we are going to do today, we are also going to focus on the notes, which is trade and other payables. All right, so the question paper that we have is the question paper that was written on the previous year. So let's look at the required and information that we have. All right, they said you are provided with the information extracted from financial record of Igoli supplier, then the financial year end on 30 June 2020. Okay, then they said that a required 3.1, complete a note for trade and other payables. Okay, and after that they said prepare equity and liability section of the balance sheet. Where notes are not required, show all workings in the brackets to in part marks. All right, so in this question we are required to prepare only owner's equity and liability section. So I'm gonna do another video depending on whether you want it, you guys, or not. So if you want me to do another video, guys, please make sure that you subscribe and like. I'm gonna check how many people like this video, then after that I'm gonna decide whether I'm going to do another a full balance sheet from other question paper. So if you like this video, guys, or if you are going to learn something about this video, please make sure that you like and comment so that I can decide to do another video. All right, so the first note that we are going to do is trade and other payable notes. Okay, then let's check the information that we have. Extract number 1, they give us a balance and total on 30 June 2020. The balance sheet account section, they give us a capital, drawings, land and building, debtors control, until the last balance of unemployment insurance fund, which is UIF. Okay, so majority of the balance that they give us, of course, they form part of equity and liabilities because they didn't ask anything about any assets. Okay, but you have to know everything that falls under trade and other payable, because some of them they are not going to provide you under your answer book. So you have to make sure that you know all these items that fall under trade and other payables. Okay, when we talk about a payables, it simply means that we are talking about liabilities. As a company, we are owing someone. Okay, so this is what we are going to do under this note. Okay, for example, we have a trade control. A trader's control simply means that we are owing our supplier. We took goods on credit and we have to pay our supplier. Okay, we also have an accrued expense, which means that we are owing expense. We haven't yet paid expense. And income received in advance. Someone has paid us an item for next year and we haven't performed anything for that person, which means that we still owe that person a service. We receive income, but we didn't give that person anything, which means that we owe that person a things, whether it's a good or service. Okay, then we also have a creditors for supplier, a creditors for salaries. It simply means that we owe our supplier. Okay, and the other one, SARS pay as you earn. The money that we collected from our employees' salaries, we have to pay it to SARS. We owe SARS in other words, and as well as UIF. Okay, we collected from our employees, we have to pay it to SARS. We owe SARS, okay, or government. So let's check if we have any transaction related to this item that I just read. Okay, we have additional information number A up to E. Okay, then number 1, they said after taking into account adjustment, a correct net profit amounted to 245,000. So this amount, guys, it doesn't fall under this note because this is a net profit. It's gonna fall under equity. Okay, we haven't arrived on that part. Let's proceed to number B. A debtor with a credit balance of 650 must be transferred to creditors. Yes, this one is going to fall under creditors control, because they say that a debtor that was owing us, we have to transfer it to creditor, which means that we have to open a bracket. The reason why we are opening a bracket is because we have a balance for creditors control and the one that we have to adjust from the transaction. Okay, let's check under transaction. A creditors control amount that we have is 38,500. 38,500 plus 650 that they say that we have to do what? To transfer. Simple as that. Okay, which means that if we don't have any other transaction related to creditors control, we have to add and get the total. Okay, if you add the total, you are going to get an amount of, let me calculate, 39,150. Okay, then I already explained the meaning of accrued expense, which means that we have to check if we have any accrued expense in our balances. Okay, let's check accrued expense. Yes, we have it. 4,200. Income received, we have it. Prepaid expense is an asset. It doesn't fall under this note. Okay, the reason is because we paid in advance, which means that someone is the one who's owing us, not us owing someone. Okay, and creditors for salary I explained, SARS, pay as you earn, and UIF I already explained. Okay, but we have to check if the additional information that we have, they have effect from this amount before we just copy and paste them. Okay, if they have effect, we have to open a bracket and show calculations. Okay, then number C, they said on 30 June 2020, owner increased his capital contribution by providing a motor vehicle of 80,000, with 80,000 to the business. So this is a capital contribution. It will fall under owner's equity. Okay, then number D, the business plan to pay a quarter of the outstanding loan in the next financial year. So this one is gonna fall under non-current liability as well as current liability. We're gonna do it when we arrive there. Then number E, a debtor K Kumalo transfer 1,700 into current account of the business. So this one, of course, is going to affect a bank, because someone is paid us the amount that he's owing us. So it doesn't affect anything that is related to liability, trade and other payable. Okay, so we read all transactions that we have and we don't have any effect, which means that now what we have to do, we're just gonna copy those amount. Accrued expense, okay, is 4,200. No brackets because it doesn't have any effect. Okay, then another one, we have income received in advance, 3,600. Okay, another one is creditors for salaries, 12,300. And another one, we have pay as you earn, which is 5,300. Okay, and the last one is UIF of 4,800. And after that, we have to make sure that we calculate total. We add 39,000, 4,200, 3,600 until 4,800, which is going to give us amount of 69,350. So this is how we should prepare trade and other payable notes. So you also have to make sure that you know trade and other receivable, because it can happen that on the test or examination that you are going to write, they didn't bring this note, but they bring trade and other receivable. So it's very simple, guys. As long as you know what fall under trade and other payable, what fall under trade and other receivable. So once you know that, you will be able to identify them on the balances that they give us. So trade and other receivable is all about someone who is owing us. Payable is us owing someone. Simple as that. Once you master that principle, it's gonna be simple for you, because you will know that, okay, if we're talking about creditors for salaries, we are owing our employees they work and we owe them what? A salary, which means that it's payable. Payable, remember guys, it falls under liability part. Receivable fall under an assets. Okay, so I think now we can go and do our balance sheet. All right, so our balance sheet is very, very simple. I know some of you, your brothers and sisters who are doing grade 11 or 12, they told you that a balance sheet is very difficult because you have to make sure that it has balance and all those stuff. So guys, that's not a problem at all. What you have to do, you have to know, make sure that you master skeleton first. Know what's fall under assets. Know what is going to fall under equity. Know what is going to fall under liability. Once you know that, guys, it's not gonna be that difficult for you because each and every transaction we're going to do it here on YouTube, so that you will understand how to adjust this, how to adjust that. All right, so let's check on our question paper. We are going to start with the part of owner's equity. Okay, they didn't ask us to prepare an asset section. Owner's equity. All right, under owner's equity, guys, we put something like that is related to profit, something that is related to capital, everything that is related to income statement, we put it under owner's equity. In other words, we have retained income. Retained income is the one that put everything that fall under income statement, and the other thing is capital, and we have to make sure that we subtract a drawings under owner's equity. Okay, let's start with the capital amount that we have is 409,000. 409,000. Okay, then after that we have to check before. Okay, then we have a drawings of 140,000. As you can see, our capital is on the credit side because owner's equity increase on the credit side and decrease on the debit side, which means that a decrease on the debit side simply means that we have to subtract. Okay, minus capital of 140. In other words, the owner withdraws some cash. It's no longer part of what? Of capital, because he took it for personal use, which means that we have to subtract it. Okay, and then let's proceed. We read transaction number 1, which states that after taking into account adjustment, correct the net profit amounted to 245, which means that profit is going to increase what? Our worth. Equity means that worth of the business. Okay, a plus 245,000. Okay, then let's check if we have any other transaction that is related to capital or related to income statement. Okay, we have number C. 30 June 2020, the owner increased capital contribution providing a motor vehicle worth 80,000. That 80,000 is capital contribution. He contributed 80,000 so that the business can run, which means that a worth of business is going up because of increase of capital, which means that we have to say plus 80,000. Plus 80,000. All right. Then let's check if we have any other transaction related to owner's equity. Okay, we don't have any in this case. We don't have any. All right, I also want to emphasize this. In case where you are not given a net profit that has take all adjustment, it can happen that they give you a bad debt or they give you any other income, which means that if it's an expense, you have to come and subtract. If it's an income, you have to add. But you have to be careful of this transaction that I'm going to repeat it now. Number C. On 30 June 2020, okay, it's number A, sorry. After taking into account the adjustment, the correct net profit amounted to 245,000. If you listen again to first part, they said after taking into account the adjustment, which means that it's after they adjust all those income and expenses, which means that We don't have any other problem now to adjust income and expenses. In this case, they are already adjusted. They give us the correct net profit. But if they didn't give us correct net profit, which means that we have to adjust those income and expense under owner's equity. Very, very simple. Okay, now let's go to non-current liability and current liability. But I want you guys to understand what is the meaning of non-current liability. This is the liability that we are going to pay after 12 months. Okay, let me write a note here. It's after 12 months. Once you hear the words none, simple means that it's more than a year or 12 months. A current is less than a year. Okay? Is it less or before? We are going to pay a debt before 12 months. Okay. For example, trade and other payables, it fall under what? Current, which is going to be paid before 12 months. If you check, our supplier, obviously, we have to pay them as early as possible. We can't borrow a stock on January and expect it to pay it next year, January. No, it doesn't work like that, because we're still gonna need more during the year, which means that we must pay the one that we take on January 1st so that they can give us another one. For example, the other example, creditors for salaries. Obviously, employees, we have to pay them every month, which means that if we don't pay them, they're not going to work for us. You understand? So, which means that we're going to pay them before 12 months or within a year. Simple as that. None means that after a year. If you check, under non-current liability, we only have mortgage loan or loan from the bank. Because yes, we can borrow a property, or we can borrow a loan from the bank and tell them that we can pay this by installment until 5 years. Okay, then even if you go on under your assets, non-current assets and non-current assets, it's the same procedure. Non-current assets simply means that this is the assets that we are going to use for more than 12 months. For example, under non-current assets, we have property and plant equipment. You can't buy a car and expect it to use it for only a week or 4 months. Obviously, if you buy a car, you're expecting to use it for more and more many years. Okay, like equipment or computer, you're expecting to use them for many times. Current assets, we have something like inventory. We can't buy a bread today and expect it to sell it next year. They're going to expire, which means that that's why inventory is fall under current assets, because it's for short term. Bank, money goes in and out each and every day, not after a year, unless we did a fixed deposit investment, which is going to fall under non-current assets because we invested for more than a year. Okay, I think I explained enough for you to understand. Then now, let's go and check if we have mortgage loan. Yes, if we have it. A mortgage loan, we have a mortgage loan of amount of 400,000. Okay, it's 400,000. The same procedure that you do with a normal loan and mortgage loan is the same. Okay, and they say that on the transaction number D, the business plan to pay a quarter of the outstanding loan in the next financial year. So in this one, you have to be careful about the interest. In case where you also have interest, you have to add interest first and you subtract a repayment. So if it's a repayment that is going to be paid next year, you also have to record it as a current portion of a loan. Current portion of a loan simply means that that liability is going to be paid within 12 months. Okay, I'm going to show you in this way. Remember, they said a half is going to be paid next year, a quarter is going to be paid next year. Quarter of 400,000, if you calculate, you can see 400,000 multiply by 1/4. It's going to give you 100,000, which is a quarter of 400,000. They said this amount is going to be paid next year, not this year, which means that we are going to subtract it here. The reason why we are subtracting it here, even if it's for next year, is because it's no longer more than 12 months, but we are going to pay it within 12 months because we're going to pay next year. It's now within 12 months. It must go out into our non-current because non-current only hold for more than 12 months. We have to take it out here and put it to a current, which is what? A less than or before 12 months, which means that our current portion of a loan is going to be under current liability because we are going to pay it within 12 months. Simple as that. All right. So let's check another one. We have trade and other payables. Trade and other payables, guys, remember we already prepare a note. So under a note that we prepare, we got the total of 69,350. Okay, which means that you're just gonna copy and paste. All right, so we also have to calculate a total under owner's equity because we don't have any other transaction. So it's going to give us 594,000 rand. All right, so let's check another transaction that we didn't adjust. Transaction number E. A data AK Kumalo transfer amount of 1,700 into current account. All right, so I want to explain this clear. So if you check, we have bank overdraft. In other words, we have a negative amount into our bank balance. We don't have positive amount, we have negative. In other words, we are owing a bank overdraft. We are owing a bank amount of 3,200. All right, now someone who was owing us come and pay 1,700. Now the question is, are we going to record that 1,700 into our bank under assets? Yes, but remember our balance is still negative, which means that once we put money into a bank is going to take that money that we owe to them and left with a certain amount if we would still have another balance. Because you can't say you're owing me 100 rand and you said just hold this 50 rand, I'm going to toilet, I'm going to toilet and I will come back and take it. No, I'm not going to give you that 50 rand because you still owe me 100 rand, which means that I have to take that 50 rand and then you will still have to pay me another 50 rand. It's working like that. So which means that even the bank is the same case. They can't just you can't just receive 1,700 and say you have balance of 1,700. No, you pay bank first because you owe them and the amount has been transferred to their bank. Okay, which means that 1,700 is going to reduce a liability that we have under bank overdraft. Okay, then we're gonna left with amount of 1,500. 1,500. Okay, simple as that. Then after that, we're gonna calculate balance here, and we're left with 300,000. Current portion of the loan is gonna give us 300,000. Okay, then after that, I think it's gonna give you the total. If you add everything, you have to make sure that you calculate even on your side so that you can get a correct amount. It's gonna be 1,104. Okay, 4,850. All right. So that's how we should prepare a balance sheet, guys. It's not that difficult. It's a straightforward, and it doesn't have a lot of trick. As long as you are able to categorize that this one fall under assets, this one fall under equity, this one fall under liability. So that's it for this video, guys. So please make sure that you tell me something on the comment section, so that whether you want more videos under the same topic of balance sheet and notes or not. Make sure that you like, subscribe. See you next time, guys. Goodbye.